please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, there goes the bell, and the first tick is about 88 up on the Nifty and 370 up on the Sensex. Sensex up over 1%, 35,450. Nifty inches closer to 10,900, 10,875 as I speak. But the Nifty Bank, I mean, your eyeballs would pop out. It's 570 up on the Nifty Bank. That's 2.1% higher. So obviously it's an all-time high, and yes, the firecrackers have come up for the Nifty Bank this time. But actually the other indices are also at all-time highs. Now it would be regular, all these all-time highs. So top gainer is actually SBI, and let me again remind you that FDI in SBI or FPI is only 12%. The permission given is 20%. Even now, it's not filled up. So you open it to 49, will they come? But that apart, the stock is up 2.8%. ICICI 2.6% higher. Yes Bank 2% higher. HDFC Bank 2% higher. Axis 1.8 higher. And then come the rest. HUL 1.4. IndusInd, Kotak Mahindra both up about 1%, HDFC 1%, and that's enough to tell you the story. I don't think there's much in the red. Bharti Infratel, obviously, GAIL, NTPC, Reliance, down about 0.5% each. It's only Bharti, that Infratel, and GAIL that's down 2%. Mid-caps?
Oh, breathtaking moves in the market, Lata. I mean, the mid-cap space is up almost 1%. The market breadth is solid today, 6-1 in favor of the advances. The stocks to look at, Mindtree, of course, is top of mind in the mid-cap space, up 8% now on the back of good numbers. Adani Transmission is not too far behind, 5.5% after good set of numbers. Tirumalai Chemicals reported very good set of numbers. That stock, I think, is up almost about 8% or so. You have a Jubilant Life Sciences, positive commentary coming in from the management, so 4% higher there. You have a couple of these stocks, you know, like JNK Bank, Bank of Maharashtra, etc. All the banks basically that are doing very well. A whole host of stocks moving around. But Anuj, once again, you know, it's the market. The run-up that we saw yesterday, if anyone thought, you know, that was less, I mean, today's move is phenomenal just in the first few minutes of trade.
Yeah, but the Nifty Bank has sold into.
It has sold into. Let's not make a mistake about that. But, you know, I just want to point out one stock which we may have missed, UPL. I think that's the one which has had a bit of a...
As good as HUL, the gains.
Exactly. And, you know, I think the reason for that is that CLSA has initiated coverage on that stock with a price target of, I think, 940 or 950, you know, and today is that GST Council meet as well. So, you know, in general, you will see all these agri-related stocks do well. So, I think maybe, you know, you don't want to focus too much on banks today. Maybe you want to focus on a couple of other stocks because banks have had a huge gap up and after that they are slipping. So I think stocks like UPL, M&M, I think these could be the stocks to focus on. But anyway, Ashwini, your thoughts on market opening, and you got that initial dip. Are you buying that, or is there a different trade? Initial dip has been from the high point.
See, the way things are going from higher levels, banks are facing some amount of selling. So, and the gap is more than, you know, the usual 100-150 point gap that we see. So, it won't be a bad idea to just wait it out, because things may not be so clear, because the news is not seeing buying, it's actually seeing selling. So the positions we are taking are for the moment short positions, and then see what happens. But it's very difficult to take a clear trade. Possibly, I think once this first half an hour settles down, we'll see a clear direction on the market.
Yeah, of course, we have to keep in mind that it's a proposal and not yet a done deal. And of course, in some cases, there is still headroom available. Sudarshan, what would your take be? Still very cautious, no carry forward, no carrying your intraday trades. What are the advice?
Yes, you're right, Lata. A little cautious. And intraday trades also, the dip needs to be a consolidation. So once we have a 1 hour, 1.5 hour consolidation, and then that would be a buying opportunity. That means we have to wait it out. I think that's the right way. Dabur is a buying opportunity. You know, FMCG, which we are focusing less, but because we're talking of banks, it's FMCG which could really be the outperformer today. Sure. So I talked about Britannia and Dabur.
Okay, Ashwini, what is the big call for the day now?
See, big call for the day, I would think would be in techs, in Mindtree. Jet Airways restarted its up move yesterday. So I think instead of focusing where the news flow is, if you focus on the other spaces which are doing well, that could be the right idea.
Okay, in fact, I just want to point out one more stock, which is Wockhardt. Just pull out the chart of that stock. It's out of F&O ban. Last time when, Wockhardt came out of F&O ban, we had seen a big 10-12% move on that one. So that stock is right now having a big move. Ashwani, thoughts on Wockhardt? Bounced back from big support and now trading 4.5% higher?
See, Wockhardt has reversed its downtrend, so I think now IT, pharma are in a different kind of zone. So my sense is that Wockhardt will see higher levels. It's restarted upside, possibly 1200, 1250 could happen on Wockhardt.
Okay, well, mid-cap IT is surging after Mindtree's numbers. So Hexaware is at a fresh 52-week high right now. Mastech is up 1% ahead of its numbers today. Mitesh, quick thoughts from your end on any stocks that you've spotted this morning?
So I think HDFC Limited still looks interesting to me on the positive side, while GAIL is negative. And coming on Mindtree, I think I would use this gap to buy into this one, but not at current levels. I think some pullback to about 660 is what I'm waiting for. If that happens, that'll be good levels to enter. I think the stock still remains in a medium to longer term uptrend.
All right, gentlemen, thank you very much for taking us through the early morning trade. At the moment, the market is still selling into the giant stride it took at the opening. Let's see where it settles, as Ashwini says, or Sudarshan said, I think, wait for a 1 hour consolidation before you make your move. And maybe it would be wise to focus on non-banks today. We are seeing a big move now suddenly in Hero Moto as well. So if HUL is flagging off good rural growth or good rural demand, then I can understand why two-wheeler stocks also are going up. And yesterday's Zee Entertainment, after the sell-on news, is now seeing buying today. It was good numbers, and that's 1.4%.
Yeah, I think today you may want to focus on non-banks. Lata, as you said, ITC is making highs of the morning. iShares is making high of the morning. For me, really, the big stock of the morning is Wockhardt. That's out of F&O ban. That's making highs of the morning. Cadila is making high of the morning. So a lot of these stocks doing well. Good time to invite our market master. Then Deepan Sheth now joins us from HDFC Securities, of course. Deepan, good morning.
You can't talk about the stock of the morning.
Yeah, you can't, because that's HDFC Bank, of course, and HDFC itself. But
I'm rather relieved, I must confess.
Okay, but thoughts on whether the bank Nifty has found its mojo back and private banks have found their mojo back, because we went through a period where the market leadership went to some other stocks. But your thoughts on the last few days?
So we continue to be more than averagely constructive on the private sector bank pack. This talk of FDI coming into the PSU banks and all of that is interesting news. I don't know whether it structurally changes the argument that PSU banks are fundamentally weaker than private banks in the opportunities that India will present over the next 10 years. Now, and it doesn't apply to all PSU banks. We are completely in love with, let's say, a Bank of Baroda or a State Bank. But the others, I think, are going to stumble, recap or no recap. Even with recap, do they have growth capital? So, and this assumes a whole lot of resolutions going, around stressed assets going right in IBC. Even after that, I don't know whether they have growth capital, and do they have the intellectual capital? Now, I know that sounds a little harsh, but look at the way private sector banks are able to attract and retain talent. Look at the way their chairmen have long tenures. So the big thesis that has played out over the last 10 years, that private banks are in a much better place to do business than PSU banks, is going to continue for another 10 years. And they've been only taking market share. They'll continue to take market share. So you're happy to give, 3x or something like that to an IndusInd Bank, or 4x to some of the bigger names and so on. So there's no need to go soft on, let's say, a Kotak Bank on its business trajectory right now, or an IndusInd Bank. And if you're seeing high credit growth playing out at some of the PSU names, or in some other names in this quarter, remember you had a demon quarter. Now it's not, so IndusInd actually grew 20-25% in even the demon quarter. So that kind of capability is clearly not going to be exhibited by the PSU bank pack as a whole. Although, like I said, the disclaimer is that obviously the SBIs and BOBs of the world are a class apart.
Okay. Well, therefore, let's come to where the news is clear.
Yes.
I mean, after all, in the banking sector, we are still looking at a proposal that has not yet been accepted. Let's look at Mindtree. The numbers were clearly impressive. Right. Does that make you take a renewed look at tech stocks, and which ones?
So we actually organized a mid-cap IT conference a month ago. We've been constructive on IT for a while, and we've been looking like fools, but for some time. And I think the tide is turning now. It's a relief to see the tide turning. The mid caps have already run up. In fact, this time around, if you'll notice, the mid caps have led the large caps in the pullback from the lows. If you look at the last 12 months of their charts, you will clearly see that the L&T Infotechs of the world, the Hexawares of the world, the high quality mid-cap companies have clearly shown the way, an emphasis. So now it's time for, I guess, the large cap IT pack to catch up as well. And not everything was going to implode in their business models anyway, and we've been saying this for a while. If you look at the kind of deal wins that TCS has got, so you look at the 1% headline growth and you say, but where's the excitement? But look at the quality of their deal wins, the pricing. So this time I think there's a pricing uptick also visible in Mindtree's numbers. So clearly, and this sector has got cash-rich companies doing 30% ROCE businesses. If they went through 2 years of bad growth, I think now with the US economy taking off, lower tax rates, higher discretionary spends, it augurs very, very well for the sector.
So
and remember, we are at 64 to the dollar right now, and we've got excited. What if we go to 67, 68?
Your pick of the pack here is HCL Tech. I mean, it's been doing well compared to its peers for a while, but you still like it?
So on the large cap pack, I think compared to both Infosys and TCS, HCL Tech's growth trajectory looks different and more shall I say, durable versus the rest of the pack when we went through a stressful phase in the sector. And it still looks more durable and bigger to us. Valuations are mouth-watering right now. If you look at the entire sector, what should I say, re-rating, then if I can refer to my cheat sheet, HCL Tech is available for under 13x. Remember, my analyst has given 17x to Mindtree. In fixing its target price, and with a large cap company like HCL Tech available for under 13x, close to double-digit earnings growth, I think there's a big opportunity looking at us.
Okay, in fact, today is an IT and pharma day. Clearly, and Cadila, Divi's, already spoken enough about Wockhardt, so that clearly stands out. And by the way, we're talking about Mindtree. Just take a look at once again an intraday chart of Tata LXC. That's been one of the strongest mid-cap IT stocks, and that's the one which is now once again making highs of the morning. So quite clearly, a lot of these stocks doing well. So
Yes is up 3.3% on the day ahead of its numbers.
Yes,
very clearly there is no RBI problem.
Yes, but
so that is one positive, and besides, of course, the ownership.
Exactly. So Yes Bank making highs of the day, which is quite interesting. Once again, referring to your cheat sheet, give us some interesting stock ideas then. Any mid-cap?
So like IT, Pharma.
Yes.
And again, we've been thumping the table on pharma for a while. I must confess, we've gone wrong on, let's say, a large cap like Lupin, which is down some 40-45% from peak. It, in fact, was down 50-odd%. And I would suspect Lupin has made a bottom now, and I'm not looking at the charts to tell you this, but all that could go wrong in the business, and this is exactly like the IT story. The doomsayers have a field day for 6 months, and everything seems to go wrong for the sector or for the company. So you name it: regulatory challenges, pricing pressure, lack of approvals or slowing down of approvals, legal hassles. All of that came together for this company, and it's too good a company to go to just go bust like that. And so while Lupin, I have to sound brave and continue with my buy call, I must also say that a high quality name like Cadila, which by the way doesn't seem to be afflicted with the diseases of the sector, if I may say so. No regulatory hurdles visible, very strong launch pipe, no legal tensions, and valuations, well, about 16-17x, I guess, but very strong growth prospects over the next 2 years. I think it's probably the best placed stock for a safety first kind of investor at this point of time. But the brave hearts can go out and buy Lupin. I think there is big money to be made there.
Okay. What about HUL? The numbers there look good. So much growth after a long time. Is it only HUL, or do you like any other mid-cap FMCG names as well?
So in FMCG, I think it's not time to look at the mid caps. It's actually time to look at the large caps. And FMCG will always trade at a premium to market multiples. And that's why market multiples are below FMCG multiples, because there are a whole lot of sectors which are lower than market multiples. And in the FMCG pack, we are, so first on lever, I think the 11% volume growth number is a little bit of noise. you need to take it with a pinch of salt, because we really didn't know how bad the how good the incremental impact of GST restocking was. And here's a company which is saying we'll actually give money back to the government because of the GST boost, the margin boost that happened. And I suspect the 11% volume growth also added some fat to the fire there. I think we should see a moderate trajectory, a relatively moderate trajectory here on, but a very solid trajectory. So again, remember, if I remember right, 1Q in this year was roughly a 0% volume growth for lever because of the GST destocking, right?
Yeah.
So it's actually going to go through 2 or 3 quarters of a reasonably decent base for it to be able to show 5-6% volume growth. We know the government is going to spend more on rural India and put more income into the hands of rural India. So I think lever is very, very well placed, despite the 60-70% run up or so in the trailing year. Another 10-15% move from here should actually be at or around index returns as we see them over the year. Now, outside of lever, I think the stocks to point out would obviously be ITC, which continues to be the cheapest name in the FMCG pack for whatever reasons that we've kept on ascribing to it. A little bit of a stick might come out during the bubble, during the budget, but I don't think we're in a bubble territory here at all. There's nothing to worry about ITC in terms of valuations. It's clearly trading at about 30% discount to the sector. Maybe 20% discount is fair, but I think the volume growth challenges are now behind.
All right.
So ITC is the big name I would
That's a bunch of sectors you have discussed with us, Deepen. Thank you very much for dropping by. And on a day when, of course, all the indices are at all-time highs, never mind that the high got sold into.
No, but that's been bought into again. So, you know, high got sold into, but after that, there's once again buying, which is happening in especially banks once again. And now we're back to a high point of the morning. 2% higher is what we have on the bank Nifty. And keep in mind,
don't miss the Sensex. That's up 1%. So it's 35,500 almost.
Yes, but the bank
35,000 yesterday, 35,500 today.
2%. Weekly options expiry. The 27,000 call is up 13.50%. 13 bagger is a call. I mean, that's what the magic of weekly expiry. So things looking quite good at this point in time.
Okay. Well, for now, we have to ponder about the big macro news that's going to hit us, the budget. We just got a bit of a macro news yesterday when the government reduced its extra borrowing program from 50,000 crore to 20,000 crore, saying that it has reassessed its revenues and expenditure. Rating agency Moody's has been, of course, one that's already been positive on India and China as well. They expect both these economies to be the fastest growing economies in the Asia-Pacific region. Marie Duron, Senior Vice President, Sovereign Risk Group at Moody's Investors Service, has joined us now. Good morning, Marie. Thank you very much for joining us. Well, first up, how did you read the Indian government's announcement that it will borrow less extra? It is still borrowing extra, but less than previous. Are you getting more confidence that this year's deficit will not fly too much, will not be too much above the budget estimate?
Yes, so in that very announcement, there might not be so much really from a sovereign risk perspective to read into. One is governments do adjust their borrowing plans. They also adjust the kind of the structure of the financing between different instruments. We see that in a number of places. Second is that the amounts, so the adjustments for 50,000 crores to now 20,000 is relatively small in relation to the size of overall borrowing and the size of the Indian economy. So it would not really materially affect the kind of fiscal metrics going forward. And last, and that's really a kind of a particular feature of India, and one that is relevant to the sovereign rating, is that it is relatively insulated from fluctuations in yields by the long maturity of its debt. So adjustments of kind of borrowing from one year to another do not have really a significant impact on the overall cost of debt. So overall, we do not think that there is too much really that is directly relevant to the sovereign rating there. As far as the fiscal picture is concerned, we expect that the budget deficit that will be announced will be somewhat higher than budgeted at this time last year. So we expect for the general government as a whole a deficit of around 6.5% of GDP. That would come with a stabilization in debt, but the upgrade in the rating that you kind of hinted at earlier, so we rate India at Baa2 with a stable outlook, That really takes that medium-term perspective on the fiscal and on the growth side, and that with, over time, strong growth in India continuing, and indeed picking up from last year, then we expect the fiscal metrics to gradually improve and strengthen, and the debt burden to ease somewhat.
Okay, this 6.5%, which is, I guess, state plus central deficit, how do you see that panning out next year? Because the GST has quite clearly benefited the states. So next year, the 6.5 becomes what, or what would you like it?
So we see a gradual kind of narrowing of the deficit, so the government really maintaining that stance of gradual fiscal consolidation. And so from the at the center level, there might be scope for somewhat narrower deficit, in particular with the economy recovering. GST in itself is really designed to be revenue neutral in the first few years, and so we think that the revenue accretion will, for the general government, will come over time from increased tax compliance and from really potentially also increased productivity from a simplified tax system. But that we do not expect to really see immediate impact as of the next fiscal year.
So, Marie, if the government decides to run a higher deficit in order to push growth, what kind of growth targets are we looking at? What are you penciling in, both for India over the next 1 year as well as for China?
Yeah, so we expect, and we have seen signs that the Indian economy is recovering after the temporary shocks of demonetization and implementation of GST that led to some short-term disruptions. So for 2018 as a calendar year, we forecast a 7.5% growth rate in India, and we expect that to be maintained and growth between 7.5% or even potentially slightly higher over the next few years. Given the favourable really demographics, given the momentum behind incomes catching up and productivity growth that we expect to see. For China, the trends are somewhat different there. We expect a gradual slowdown in China. Last year, 2017, surprisingly on the upside, and so GDP growth is likely to be not much below 7%. For 2018, we expect a gradual slowdown towards 6.6%. The drivers of growth are quite different, and so in the case of China, for instance, the demographic drivers that I explained for India are much less favorable, and China is in the process of really rebalancing its economy more towards the services sector, and that could come with somewhat lower growth over time.
Okay, Mary, thanks a lot for your time today. Just want to point out one issue here. While the Bank Nifty is up 517 points, and would take your thoughts as well on that. I just want to point out one stock, which is IDBI Bank. And why it's interesting is because in IDBI Bank, you have government which holds about 77.8% stake, LIC which holds about 12.7%, and the balance is only 9.5%. So there's absolutely no free float. Why the government may want 49% FDI and PSU banks when the current limit of 20 is also not getting exhausted? One reason could also be IDBI Bank, where something similar like it happened in the case of Axis Bank. Remember when it used to be UTI Bank, of course, for longest, and we saw that big re-rating of UTI Bank after that. That could be one reason, and that's why if you see the PSU banks, there's a bit of rally which is happening in some of these stocks. So I just thought it's an interesting anecdote that I picked up. So just thought that would be interesting.
I would really caution people on IDBI Bank. The government tried its level best. There it is not bound by the law.
Yeah.
It is very easy to extend government, to bring down government ownership below 51. And it tried when IDBI Bank's NPAs were closer to 10%. Now IDBI Bank's NPAs are at 25%. So you have some work to do. Bring it down to a sellable level. The bank has to be sellable. You can't really sell it at 25%. And IDBI Bank doesn't even have the advantage of branches. Something like UCO Bank with an equally troubled balance sheet at least has branches. IDBI Bank started as a DFI, financial institution, and therefore it's not necessarily sellable. I think the market is just hungry for ideas and pushing money everywhere. These are to expect that IDBI Bank will be bid by foreigners at any attractive price at the moment looks tough.
Okay, well, let's get another market voice in then, because this market is just running away right now. Hiren Ved, the director and CIO of Alchemy Capital Management, joins in on the phone line. Hiren, hi, good morning. Great days to be in the market, record highs. Are you getting a bit cautious at this level like most other market experts are, or are you just riding this bull run?
Yeah, hi, good morning to all of you. And yeah, I mean, I think this market is on a very firm footing, and it looks like that nothing can disturb this market at this stage. So to use a much cliched word, markets climbing all walls of worry.
Okay. Well, Hiren, I pointedly want your outlook on private banks. There is a proposal, it's not yet, it's something government is considering to increase foreign investment, to allow foreign investment up to 100% in banks. So how do you play this proposal?
No, so I think, I think private banks have always been favored by, by FIIs, and I believe that there is, if this proposal does become finally, into policy, then there will be more headroom. I think to my mind, I think the immediate beneficiaries will potentially be the leading private sector banks, so the likes of HDFC Bank and ICICI and Axis to begin with, which is where I think because, the market's now turning and some of these corporate banks which were lagging behind, could see increased investment and interest. And I think we are already seeing that in the prices of ICICI and Axis Bank as well. So I think that's where the headroom is likely to have an impact on the valuation of these banks.
Has the time come to buy IT now, Hiren? I mean, good numbers coming in from the likes of Mindtree, but also good commentary coming in from some managements like Infosys, etc.
Yeah, I mean, it looks like that, IT as a sector, the large cap IT offers value, and the mid cap IT selectively is where you will find growth. And I think that the economy in the U.S. is looking buoyant, which is the largest market for IT, and it looks like that the tax cuts in the U.S. should prompt, some of the large corporates to spend a little more on technology, and you could see some kind of a cyclical demand recovery in IT coming through. So yes, I mean, IT looks good to us as well.
Okay. Among the other stocks that are doing very well is Varun Beverages. That was a stock that you had picked up at the Soon conference. Our colleague Nimesh is pointing that out. Any thoughts on this sector?
See, I think, Lata, a lot of the consumer companies which are, which have, large distribution infrastructure are likely to benefit from GST, right? And clearly, I think in the case of Varun, over the last few months, they've picked up more territories, and they have strengthened their relationship with Pepsi, and now even juices and many more products are likely to be sold through the same distribution. So it's you've built a fantastic distribution. Now how many products can you sell through the same distribution? Your return on capital is likely to keep going up. So I think, we've seen that in the case of Lever. I'm sure you will see that as we go along in the earnings season in several of the consumer FMCG companies, that you will start seeing the benefits in margins as a result of the efficiencies gained from GST.
Okay. Hiren, good morning. The point here is that are we now going through a bit of a melt-up phase? Bank Nifty is up 550 points today. The Sensex is up 360 points on top of the kind of gains that we have seen overnight. Dow was up about 330 points. Globally, equities, you think in the near term is in a bit of a melt-up phase?
Absolutely, I agree with you. We are in a classic melt-up phase. I think that at this point in time, as long as the global markets continue to move the way they are moving, I see no reason why the Indian market should not follow suit. I think we are now in that phase. The proverbial question that everybody was asking was, this market will sustain if earnings come through, and I think that proverbial if is being answered in this earnings season, where we're seeing some of the large cap and good quality companies show reasonably strong earnings growth. So I think for the time being, it's party time, but there is a little bit of froth building up in the small and mid cap space, so I think people will have to be careful there.
Okay, well, exactly what was going to be my question. How do you play melt-ups?
Nothing. I mean, you just stay invested in your high conviction names. You don't chase the market just because it's going up. So you have to be mindful of what you're buying and at what price you're buying. So I would say, while there are still a lot of individual opportunities that are available that you can make investments today, but generally speaking, I think the small and mid-cap space is a little stretched, and people will have, should be cautious and careful before putting their monies. From a long-term perspective, you will be fine, but unlike last year, this year you'll see far more volatility in the market. So you just have to be mindful of the fact that there might be sharp corrections along the way.
In fact, that was my final question, Hiren, before letting you go. Nobody wants to talk about it right now, but what's the biggest risk to this market?
I mean, those are risks that I and you don't know, but as of now. But, I think, I still feel that the direction is up. But we should not forget that even in raging bull markets, we've had 10, 15, 20% corrections. When will those come? Who knows? But it's in the nature of markets to correct. I think the only thing that I see which is amiss is that I think that the relative valuation or the premium of the small and mid caps to the large caps is at its highest that we've seen in many, many years. And there has to be some mean reversion that will happen. When that will happen, I do not know. And, that's just what we have to be mindful of.
Fair point, Hiren. Thank you for putting that caution on the table. And thank you very much for joining us on a day when all the indices have touched fresh all-time highs. Good to have you with us on such a big day. But yes, that caution has to be taken. When Bitcoin was going towards 20,000, the melt-up was happening. I guess nobody thought of what event might bring it below 10,000. And it was just a stray comment by Korea. It's not the biggest country for cryptocurrencies. It's a country for cryptocurrencies. And yet that comment has seemed to have triggered a downward spiral, which has not yet stopped.